friends, this is another business studies class, and I believe you've been watching our videos and you have been enjoying the topics taught. So today we'll be looking at another topic, which is office documents, part 1. The topic is divided into 2, so we'll be looking at the first part today on office documents. So by the end of the lesson, you should be able to define office documents, identify the types, the 2 major types of office documents, which are the sales documents and the purchases documents. But for today's class, I said this is part 1, we'll be looking at the sales documents. So we'll look at various sales documents and explain their uses. The first one we'll look at is the invoice, the sales daybook, quotation, debit note, and the credit notes. So let's define office documents. We know what an office is as a room set aside in an organization where clerical activities are carried out, or we can say where work is done. So office documents, they are those documents that are used in an office to facilitate the work done there. These are documents that are used to keep record of most especially activities that involve money. They are meant to be documented. They are meant to be taken care of in an office. These are the documents we refer to as office documents. They are used to keep record of the various, most especially financial activities carried out in such an establishment. For record purposes, they serve as evidence of financial transactions. If, for example, you've carried out a particular transaction in an establishment or with someone in an establishment and it is not taken record of, it does not portray you either as an accountant or a secretary. It does not portray you as a good worker. For every activity carried out in an establishment, proper record must be taken. And there are documents that facilitate the keeping of such records. And all these documents used to keep these records are referred to as office documents. These office documents can also be referred to as source documents. They are also referred to as source documents. What's the meaning of the word source? Source is a place where you get something from. A source is a place where you get something from. So if we refer to all these documents as source documents, it means they are documents where you can get information about transactions from. Even if, for example, now I've transacted a business with you today, and in one more time, I just want to get, maybe I want to make use of the date of such a transaction. If it is not documented, I might not be able to remember. But with my source document, which is also an office document, once I have it, all I need to do is to get hold of it and do what? I have access to my information. So that's the reason why we call them source documents. They are used to get information about transactions for further purposes. So there are 2 types of office documents. The first type of office document is called the sales document, while the second type of office document is the purchase document. The sales document and the purchase document. So in today's class, we'll be concentrating on the sales documents. In our next class, we'll look at the purchase documents for better understanding to be gotten. So what do we mean by sales documents? We know what it is to sell. To sell means to give out goods in exchange for money. So this source document, they are those documents that are used to keep record of all sales transactions. Any transaction relating to sales They are all recorded in the sales document. They are documents used in keeping records of all sales transactions carried out in an office or in an organization. And there are two types of transactions. We have the cash transactions and the credit transactions. What do we understand by cash transactions? Cash transactions are transactions that involve the immediate exchange of money. They are transactions carried out in which money is immediately exchanged for what has been bought. What do I mean by this? You go to a shop, maybe to buy a carton of noodles. Getting there, the carton of noodles is 4,000 naira. Giving out the 4,000 naira, what do? You get a carton of noodles in return. That is called a cash transaction. That is an immediate exchange. There is an immediate release of money for what has been bought. While the other type of transaction is the credit transaction. This is a type of transaction in which there is an agreement with the seller now to pay for what has been bought at an agreed date or an agreed time. This one now is like the opposite of cash transactions. You don't have the money to pay for the product now, but you want to buy it. So based on the agreement you reach with the seller, okay, can you give me these goods? I will pay you by the end of the month, or I will pay you next week. There is, as at that time of purchase, or as at that time of buying of the goods, there is no immediate exchange of cash. So that is what we refer to as credit transactions. Now, why do I have these two types of transactions? These two types of transactions are not meant to be recorded in the same book of account or in the same documents. Cash transactions are recorded separately. Credit transactions are recorded separately, so that at the end of the day or at the end of a given time, you are able to know the total amount of cash transactions you made and also the total amount of credit transactions you made. So these records are kept separately, but all these transactions are meant to be recorded. So all the books used to record both cash transactions and credit transactions are all referred to as sales documents. And we can also simply say that these sales documents are usually prepared and recorded by the seller of the goods. These documents are mostly handled by the seller of the products. So we have various source documents. Let's look at the various source sales documents that we have. We have about 5 sales documents we'll be looking at today. The first one is the invoice. The second one is called the sales daybook. The third one is called quotation. The fourth document, debit note. The fifth document is the credit note. So we're going to be looking at each sales document and what they are used for, and also what they contain. What are they used for? So we begin by looking at the invoice as a sales document. An invoice can be described as a document handled and issued by a seller to a buyer to keep record of the goods provided by the seller to a buyer. It's a commercial document that is handled or issued by a seller to a buyer. You can be asked in the exam, an invoice is prepared by dash to dash. Is prepared by a seller to a buyer relating to the sales transaction. This document is a document that is used to keep down what is called the detailed information about the goods bought by the buyer. On the invoice, you have the comprehensive summary of what the seller has supplied to the buyer. And note this. Remember I said we have cash transactions and credit transactions. Be it cash transactions or credit transaction, an invoice is meant to be issued. What do I mean by this? Even if the buyer has not paid for the product, but so far you as the seller, you have supplied goods to the buyer, the goods must be accompanied with an invoice. What are the items found on an invoice? Remember I said on the invoice you have what is called a detailed sum, a comprehensive summary of what the buyer has bought or what the buyer has ordered for. So on the invoice you have a column for, of course you have the name of the buyer, also the name of the seller. On it you also have the type of product bought, the quantity bought, the agreed price for the product. All these are written on an invoice. Now, let's look at the details of an invoice. Like I said, this document gives a comprehensive summary of goods bought. So what are the items contained in an invoice? This can be asked in the exam, so take note of it. Number one, on the invoice you have the name and address of both the buyer and the seller. Normally the name and address of the seller is printed on the invoice. So there is a column where you now fill or write the name of the buyer and also the address of the buyer. Another item contained on the invoice is the date of sale. That means the date the goods were sold to the buyer. You also have the description of the goods. That means what has the seller supplied. Biscuits, bread, Indomie, you list everything out. The name of the item, what type of product has been supplied, television, radio, depending on what has been sold. The description of the goods with the quantity and the unit price. If, for example, someone has ordered for 5 television sets, the quantity column you put 5, then the description of the goods you put what? Television set. Then there's also another column for the unit price. What do you mean by unit price? The price per one. The price for one item. If, for example, like the example I gave, you have supplied 5 television sets to Mr. Uzo. Now, on the quantity side, you have what? 5. The description column, you have what? Television set. Then you have a column for unit price. That means how much will be paid for one television set? Let's say 200,000. So on the unit column, you have what? 200,000. Then you now have another column for the total price. So which means that if one television set is 200,000, and remember Mr. Uzo has ordered for how many? 5 television sets. So on the total price column you have what? 1 million naira. How did we arrive at that? 200,000 times 5, which gives you a total of 1 million naira, which means that the buyer is going to pay 1 million naira for the 5 television sets bought. Then you also write on it the terms on which goods are sold. Is it on cash basis, credit basis like I explained? Then also if you have given a discount, you can also state it on the invoice. What do we mean by discount? A reduction in the price of an item. Maybe you have given the buyer 1% discount, 2% discount. This has to be written or taken note of on the invoice. Then you also have the total invoiced amount. If, for example, you have supplied about 10 items to a buyer, each item has its own price. So at the end of the invoice, there should be a total amount, which is called the total invoiced amount. That means the amount that the buyer is going to pay for all what has been bought. That is also stated on the invoice. Then lastly, you have the signature of the buyer. Even though there are some invoices that you don't find this, but on some invoice you have a place where the buyer has to sign to show that he is satisfied with what has been ordered to him, the signature of the buyer. So all these are the details contained on an invoice. And remember, an invoice is a sales document because the invoice is prepared by the seller. And remember, I also said this, that the invoice is used or must be issued whether the goods have been sold on cash basis or on credit basis. So far the goods have been supplied, it must be accompanied with an invoice. The second type of document we look at, the sales documents we look at, is called the sales day book. The sales day book. The sales day book is a manually maintained ledger or a manually maintained book. What do we mean by this? That means it's a book where you manually write on it. That means it's not printed. You use your hand with a pen to record activities or items on it. It's a manually maintained ledger in which is recorded the key detailed information for each individual credit sale. You can underline the word credit sale. That is what the sales day book is used for. The sales day book is basically used to keep record of all credit sales. Remember, I've made mention, I've explained the meaning of credit sales. Goods bought or goods sold on credit. Goods sold on credit. You sold goods to a customer and the customer has promised to pay by the end of the month. It has to be recorded. And the book where these items are recorded is called the sales day book. On the sales day book, you have the customer's name, you have the invoice number. Remember I told you when I was explaining invoice that invoice is issued whether it's on a cash basis or a credit basis. So far the goods have been received by the buyer. So on every invoice there is a number. So the number on the invoice is recorded in the sales day book, as you can see. Then we have the name of the customer. You have the name of the customer written. Then you have the date on the invoice. That means the date the goods were, the date you as a seller, you supplied the goods to the buyer. Then you also have the total amount on the invoice. This helps you to know, let's say at the end of the month, how much credit sales you have made. It gives you a total amount of your credit sales as a seller at the end of a given period. This credit sales is mostly prepared, is mostly calculated or totaled at the end of the month. So at the end of the month, as a seller, you are able to know the total amount customers are owing you. That is the essence of preparing the sales day book. The sales day book can also be referred to as sales journal. Take note of that too. It can also be referred to as sales journal. Sales journal. The third sales document we'll be looking at is called the quotation. A quotation. A quotation is also another document that is prepared by a seller. It's a document that a seller provides to a buyer to offer goods or services at a stated price under specified conditions. If, for example, now I have an event and I need someone to maybe help me with cooking, all I need to tell the service provider is, okay, give me a quotation of what you are going to do. On the quotation, the service provider, which is a seller now, I can refer to that person as a seller now because the person is offering a service. So the person is going to state all what he or she is going to provide, what he or she can provide, and also the amount for each. So it is used to let a potential buyer know how much goods or services will cost before they make purchase. So all you as a seller need to do is prepare your quotation, and this is done before the purchase of a product. A quotation is prepared and handed over to a buyer for such a person to know what you are capable of giving out. So it is not the decision of the buyer to either accept it or go for another one through another seller. So it is used, as I've said, you have on it the list of services a seller can provide and also the price for each service. It is prepared and sent to a buyer before the purchase of the product is made. Another type of sales document is the debit note. The debit note works together with the invoice. I will explain this. The debit note works together with an invoice. The debit note is a document that is used to correct undercharged transactions. It is used to correct what? Undercharged transaction. It is a source document. It acts as a source document to the purchase returns journal. It's a document that is used to correct undercharged transaction. What do I mean by undercharged transaction? Undercharged transactions are transactions whereby you are given below the expected price. Remember, I said this document works together with the invoice. Let's assume that while the seller was preparing your invoice, there was a mistake made. Maybe as it was arriving at a total, he mistakenly skipped the price for a particular item, which automatically means that the total price on the invoice will be what? Will be reduced. So this is what we call undercharged transaction. When you are given below the expected price, below the actual price of a product. So it's mostly mistakes made on the invoice. Now, you have been undercharged on your invoice. The seller has taken note of it. To correct such transaction, a debit note will be prepared by the seller. If, for example, the total price on your invoice is meant to be, let's say, 2,550 naira, but mistakenly, the seller gave you 2,250 naira, which means you have been undercharged with how much now? 300 naira. To correct such a transaction, a debit note of 300 naira will be issued. Let's assume that, like I said, one item was skipped, which cost that 300 naira. So the item now will be stated on the invoice and the price. This will now be sent to the buyer of such product for him or her to do what? To balance the amount, because you've already received the goods, so you have to pay for it. So the debit note is used to correct what is called undercharged transaction. That means when you are given below the actual price on your invoice. The second type, or another type of sales document, is the credit note. The credit note is like the opposite of credit notes. Remember I said the debit note is used to correct undercharged transaction. So the credit note now is the opposite. That means it is used to correct overcharged transactions. So a credit note is a commercial document issued by a seller to a buyer. It's also a source document. It's used to correct overcharged transaction. That means when you are given above the estimated price on your invoice. Maybe while the person was calculating, he doubled a particular amount and now you have even paid for it. So once the mistake or once the error is detected, the money has to be returned back to you, because you have been overcharged and you have paid for it as a buyer. So for the seller to be able to return such an amount of money to you, as he or she is, because the invoice has already been prepared and the mistake on the invoice has to be corrected. So instead of the invoice to be torn or rendered useless, to correct it, the credit note has to be used for the correction of such overcharged transaction. Credit notes can also be used for goods returned by the buyer. If, for example, you have supplied goods to a buyer and the buyer has received and even paid, but while the buyer was checking the product, suddenly realized that one of the goods got damaged while on transit. That means while they were bringing the goods to the buyer, maybe something happened on the road and one of the product got damaged. The buyer has already paid for it and it is not the buyer's fault. So the buyer has the right to return such a product, and for the money to be returned back to the buyer, the credit note must also be used. So the credit note is used to correct two things: for goods returned and also to correct overcharged transactions. Debit note and the credit note, they work together with an invoice. They are basically used to correct errors on an invoice. So these are the various sales documents we have and we'll be looking at in today's class. In our next class, in our next video, we'll look at the second type of the office document, which is the purchase document. So do well to get the video and also watch as a continuity. So let's take a quick summary. Let's summarize what we have learned in today's class. We started by defining office documents as those documents that are used in an office to facilitate the work done. And I remembered saying that the office documents can also be called what? The source documents. There are two types of office documents we mentioned. We looked at number one, the sales document. Number two, the purchase document. We define sales documents as the documents used in keeping record of all sales transactions, be it cash transactions or credit transactions. And we looked at various source documents in today's class, started by looking at the invoice as a document prepared by the seller to the buyer, used in giving comprehensive summary of what the seller has sold to a buyer. We also looked at the various items that can be found on an invoice. The various items like the date, the name of the buyer and seller, the unit price, the description of the item, quantity, total price, and so on. We also looked at another document, which is a sales daybook, and I explained that the sales daybook is used for keeping record of credit sales. Credit sales. We also looked at the quotation as a sales document that is prepared by a seller to give details of goods and services that can be rendered by the seller and also the price expected for such a service. We looked at the debit note and the credit note. So the debit note is used to correct what? Undercharged transactions, while the credit note is used to correct overcharged transactions or also for goods returned as a result of one reason or the other. So these are the various sales documents we have looked at in today's class. So watch out for the next video where we are going to be looking at purchase documents, the types, and also what they are used for. So before we go in today's class, let's take some few questions to be sure we have learned one thing or the other today's class. The first question says, sales daybook will show goods sold on dash basis. Sales daybook will show goods sold on dash basis. A, cash. B, credit. C, cash and carry. D, cash and credit. E, installmental. Sales daybook will show goods sold on credit basis. The answer is B, credit basis. I said sales daybook is used to keep record of all credit sales. So the answer is B. Let's take another question. It says, the following are types of source documents except dash. Remember I said another name for office documents is what? Source documents. So the following are types of source documents except dash. A, delivery notes. B, invoice. E, check. D, receipts. E, vouchers. So which of these is not a source document? The answer is E, delivery note. Delivery notes. A, delivery note is not a source document. All the others are documents used in an office. We've looked at invoice, check, receipts, voucher. So delivery note is the odd one out. The next question says, which of the following is not a book of original entry? Though in today's class we did not look at books of original entry, but the topic is related to what we learned today. So which of the following is not a book of original entry? A, purchase day book. B, sales returns book. C, sales day book. D, debit note. E, returns outward book. The answer is D, debit note. Debit note is not a book of original entry. All these are books of original entry, but D is not a book of original entry. Another question says, which of these is not a source of documents for preparing cash book? A source of documents for preparing cash book. A, incoming check. B, debit note issued. C, check counterfoil. D, a teller. E, a receipt. Which of these is not a source document for preparing check book? Is it incoming check or debit note issued, check counterfoil, teller, receipt? The answer is incoming check, A. Another question says the following are source documents except dash. The following are source documents except dash. Credit note, debit note, invoice, receipt, and balance sheet. So which of these is not a source document? The answer is E, balance sheet. Balance sheet is a statement that shows the financial position of a business, but all the other ones are source documents. So our answer is E, balance sheets. Let's take the last question. It says a credit sale should be entered in dash. A credit sale should be entered in dash. A, creditor's account. B, profit and loss account. C, trading account. D, sales day book. E, purchase day book. So which of these is used to keep record of credit sales? The answer is sales day book, option D. That is the right answer. So this is where we draw the curtain for today's class. Like I said, watch out for the next class. It serves as a continuity of this particular topic on office documents. See you next class. Bye.